Good afternoon, and thank you so much for joining us for our webinar today. We're going to be covering the good, the bad, and the ugly for the logistics industry in Latin America. My name is Ared Delgado. I am the Digital Marketing Director for America's Market Intelligence, and I'll be serving as the moderator for today's webinar. So before we get started, I just want to go over a couple of things so you know sort of what to expect. The presentation will last from 30 to 45 minutes. And we'll be taking questions after we finish that initial presentation. Now, you can ask us questions at any point in time during the webinar. If you look at your panelist ribbon, so to speak, you're going to be able to see there a number of different icons. One is going to say Q&A. If you click on that and bring that up, you can write in your question and send that on over to us. And as I said, we'll take care of that towards the end of the webinar itself. So you can ask them at any time, and definitely we'll receive them and get to them at the end. In the meantime, one question we always get is, are the materials going to be available after the webinar? So I wanted to pre-answer that and say, absolutely, they will be. Basically, that's something that we prepare within 48 hours or so of each webinar. We edit the video, and then we send the webinar materials and the webinar video to everyone who has registered for the webinar. So those are the basics as far as that's concerned. Now, as we get into the good, bad, and ugly, I just want to let you know a little bit about where we got this idea from and where it comes from before we turn the floor over to Diego to start us off. Basically, we have been doing a newsletter issue for years now called The Good, Bad, and Ugly, in which in each practice and each sector that we manage, and for Latin America in general, we talk about good possibilities in the industry, the bad possibilities, the negative things that are happening and that we foresee happening in the coming year, and then the ugly, which are usually the worst case or black swan type of scenarios, just so people are aware of those. And we've just done that analysis for several years, and we wanted to expand it to a webinar format just to give people the chance to interact more with us and ask us our questions about this and so on. All right, so this right here that's coming up next, as we go to the next slide, is going to be the legal notice. This basically covers about our efforts to verify the accuracy of the information, and that we're not going to be held responsible for business losses and everything else because of this, that, and the other. So feel free to read that at your leisure, and that's just something that's an important disclaimer for us to go on to before we go into everything else. So moving on to the next slide, I want to turn the floor over now to Diego Rodríguez, the director of our logistics practice, so he can talk a little bit about who AMI is and what we've been doing over the course of the past 30 years. Diego.
Thank you, Abel. Thank you. And thank you, everyone, for dedicating us 30 minutes of your time. I'm very grateful for your participation, and I'm very excited to share some of the learnings and some of the trends that we have identified through the dozens of studies that we have recently conducted across the logistics industry in Latin America. But I know that some of you might not be familiarized with America's Market Intelligence. Maybe this will be your first time attending one of these webinars. So I want to start by providing a introduction about who we are and what we do. So who we are one of the leading analytical voices in the logistics industry in Latin America. We have over 30 years of experience in the region, and the firm was founded in 1993 in Mexico City by my colleague, John Price. Many of you may be familiarized with him. He's a Canadian with Chilean and Peruvian roots. So he has been all over the place across his working life. And we decided to focus the way that we attack our different clients, and we promote the expertise and the knowledge that we have across different practices. So today it's my turn to talk about logistics and to talk about the projects that we have done over the past months and years. So we have completed over 250 projects in the industry, and we can cover Latin American countries from Mexico, Argentina, Guyana, Suriname, the Caribbean, Dominican Republic. So under one roof, we have the bandwidth and the capacity to provide insights all over Latin America. And what do we do? So to put it in simple terms, when decision makers are faced with daunting questions, or they cannot find information about a specific country in Latin America, about a specific segment of the logistics industry, about competitors, about customers' expectations, satisfaction about their services, we are the company that they reach out to in order to get clarity, in order to get insights, market intelligence, business intelligence in Latin America. and we provide the information to them so companies in the US or in Europe or multi-Latinas can make better decisions, more informed decisions with specific details about their industries. That's what we can do. And we can do it through a different range of services. It could be customer research, it could be opportunity benchmarking, competitive intelligence, looking at the best practices of your competitors, looking at an macroeconomic analysis, what's happening in the region. So we have completed over 300 projects in the logistics industry, and those projects vary depending on the need of our clients. So that's so you know what we can do for your companies. So moving on, I like to again highlight the concepts of this presentation. As Abel mentioned, we wanted to create a structure and share with you trends in three great buckets: the good, which are the opportunities, the drivers in the industry; the bad, which show challenges, obstacles, difficult situations that we might encounter in the logistics and in Latin America; and the ugly, which is the absolute worst case scenario, a black swan event, and conditions that we see are not beneficial for the industry that we are working in the region. So that's basically the framework and the concept that we wanted to create for this article and for this session. We decided to turn it into a webinar because we know that for some people it's easier to participate in an interactive session, ask questions, rather than just reading an article that you might see in a newspaper or that you might find online. So that's why we wanted to create that interaction and the ability to share with you valuable content that we have learned through dozens and hundreds of interviews that we conduct yearly with logistics buyers, with service providers, with subject matter experts, with associations. So all the insights and all the information that we're sharing today is coming from that experience that we have gained. So moving on, I like to start with the good, the positive, and let's start soft, and then we can move on to the challenging points of our industry. But the good, the positive. Let's start with the first slide, and it's definitely talking about China. And I'm sure that many of you have seen in the industry how the reopening of the economy in China is turning into a boost to the global economy. And definitely Latin America will experience that boost and that drive in 2023, thanks to the recovery of the Chinese economy. And the first thing that I want to highlight here is that the manufacturing PMI index in China showed expansion in January and in February of 2023. After 3 months of contraction, as you can see in the table, basically any measure above 50 is expansion and below 50 is contraction of the manufacturing purchasing manager index. So that is very important because some sectors like furniture manufacturing, metal products, electrical machinery, equipment saw significant improvements in China. And that benefits Latin America because Latin America exports commodities and exports raw materials that are necessary for the manufacturing sector in China. And as China recovers, basically, we need to understand that China this year will experience very slow growth in the exports because of the stagnation in the global demand. So the Chinese government will be focused on improving the domestic economy in the country. And as Chinese customers return to restaurants, they spend on goods and services, we will see a boost to the Latin American economies. For instance, Chile, Peru, exporters of perishables, exporters of commodities, Brazil, soybean. Those products basically will drive the exports out of Latin America, and that will provide a boost to the logistics industry. So companies offering air freight services from South America to China, for instance, transporting perishables. That will be an avenue of growth this year. When we talk about local domestic trucking firms servicing the movement of goods between production sites to the ports, terminal operators as well, focusing on those segments that will drive growth this year in Latin America, it's a positive effect as well. So when we look at, for instance, Chinese consumers returning to restaurants, we are seeing between January, February, and the beginning of March that the spending levels are almost back to 2019 levels pre-pandemic, which is something good after 3 years of lockdowns, of uncertainty. Chinese consumers are spending again. However, one of the biggest difference between China and the US is that China did not provide cash handouts. So we won't see the revenge spending that we saw in the US, and that might impact the future recovery in China, and of course, how that will generate an impact in Latin America and in the logistics sector, specifically for ocean freight and air freight, is yet to be seen, but definitely that's a positive element that will drive growth in the region. Considering cross-border e-commerce as well, cross-border e-commerce between China and Latin America continues to grow, specifically in Brazil, in Chile, in Peru, in Argentina, those countries that have a closer affinity to Alibaba, China, and the e-commerce offer in Asia, they continue to experience growth. So that's another opportunity. Looking into cross-border e-commerce services, value-added services, last mile dedicated for cross-border is also an opportunity. Now, moving on to the second opportunity that we identified in the region, definitely you have heard about nearshoring in Mexico, and this is a real trend. It's not just a buzzword. It's happening, and it's happening because a myriad of reasons. First, because labor cost and production cost in China continue to increase. So Mexico is becoming more attractive as a location to produce closer to US consumers. And it's not because of the rhetoric that we're seeing between the decoupling, perhaps, of the supply chains between the US and China, and the rhetoric that Trump started back in 2018 about the economic war with China. The main reason that we're seeing the shift in the supply chains is because of costs, and labor costs in Mexico are very attractive. They're probably 30% cheaper than in China, and that is one of the drivers. Again, uncertainty in terms of ocean reliability, ocean air freights, ocean and air freight rates are also taken into consideration in the minds of the supply chain executives, and Mexico is becoming more and more attractive by the day. So in the chart, you see a very interesting analysis that the Inter-American Development Bank prepared last year, and the potential for additional exports in goods in Mexico could be around $35 billion. And recently, we conducted a study in which we were trying to understand the value and the volume of cross-border freight in the US and Mexico, and the growth that we could estimate for the industry is around 5-7%, which is triple the GDP growth that Mexico and the US will experience within the next 2 years. So the boost in exports will definitely occur. However, as the US consumers slow down their spending, and the liquidity crunch that we might face over the next couple of months, considering the banking crisis that people are talking about, and the bank runs that we have seen last week, we might find that the acceleration of exports from Mexico to the US will slow down, but it's an opportunity. And places in which companies are locating their operations in Mexico are primarily focused on the northern region. We're seeing Monterrey, Ciudad Juárez, Chihuahua as the most significant places driving investment for cross-border logistics. Actually, today, this morning, I read a news about DSV announcement in terms of acquiring 2 firms in Arizona. Those firms are specialized in providing services for the semiconductor industry, and DSV is planning for the future in terms of how they can serve potential companies setting locations in Mexico and in the US to serve the semiconductor industry in Arizona. So that is just one example that I read this morning about the continued investment of companies in Mexico to serve the US market. Of course, there are challenges, and 2 key challenges that we're seeing in the nearshoring in the logistics industry. First is warehousing facilities availability, and rent prices continue to go up. So in Monterrey, for instance, in Ciudad Juárez, in Chihuahua, availability of spaces already developed is at low rates, and we have not seen those rates never before. So it's in some cities like Ciudad Juárez is at 0.2% availability, so nothing available today. And considering the opportunities in the industry, definitely the development of real estate and the development of warehousing, cold storage, the development of trucking, cross-border services, and focusing on the industries that will experience the fastest growth in the US and Mexico. Again, another opportunity to look at if you're a logistics service provider. Now, if we look at the chart again, the positive effects of the nearshoring may not be felt across the board in Latin America. So Central America, for instance, have a very attractive textile industry, but the access to fabrics is not the same as in Asia, as in China. The number of suppliers of different lifestyle processes and manufacturing activities is very limited. So very simple products are starting to gain traction, like socks, underwear, t-shirts, but more complex lifestyle products that require multiple suppliers, they continue to be manufacturing in China, in Asia. So that's one of the challenges that the region experiences in terms of attracting nearshoring. But for players offering services from trucking to warehousing to value-added services for industries that are growing in North America, definitely lots of opportunities and lots of potential to grow. And when we look at how companies react during recessions, the majority of them are reacting by cutting costs, cutting investments, capital investments, cutting marketing investments. But actually what we have learned over the course of history is that those companies that are bold enough to invest more, to invest in capital, to expand their service offering, they will come out this crisis strengthened, and they will gain market share. So that something that we're seeing, for instance, and this is another topic, I know that I'm going a little bit off course, but it just came to my mind, is how companies like Mercado Libre, for instance, are investing tremendously this year in Brazil and in Mexico. They are investing even more money than in the past, considering the economic slowdown. That is a very bold move. And why they're doing that, from my point of view and from the point of view of different experts, which I have had conversations in the past couple of weeks, is because they see logistics as a critical aspect of their operation, and the way to lower cost is to invest in a better and more efficient network. So they are focused on improving the value that they provide to their customers by minimizing cost, operational cost, and reducing transit times and expediting the delivery of the goods. So what they are doing during an economic slowdown, instead of retreating, what we are seeing with Mercado Libre is they're expanding their operation and they're becoming a more efficient player. And we have seen countless examples of companies doing the same, investing more money in their operations, in their marketing during this economic slowdown. And another example that comes to my mind is how Rolex invested tremendously in their marketing efforts after the 2008 crisis. And when they came out of that crisis, they became the dominant player in the industry, in the luxury industry in the US. And now they command the highest market share that they never experienced in the US, because they made the investments when other companies were retreating. So that's the message. If you see opportunities in your industry, and if you have capital, and if you have opportunities to go after them, because this will be the time in which you can reap benefits and you can gain market share from your competitors. So that's the good and the positive. Now let's move on to the bad. But before that, I think we have a poll to share with the audience. So since I want to make this very interactive, I want to ask the attendees which Latin American logistics topics are you most interested in learning about? So these are some of the options that we have. Analyzing LatAm cities with best logistics operations, how nearshoring will impact logistics in Latin America, the biggest obstacles facing logistics in Latin America, regulations, inefficiencies, infrastructure, consumer trends in Latin America that could affect logistics. These are some of the ideas that we want to write articles about during the next couple of months. And your input is super important, because we want to write about topics that are interesting to you and topics that we don't have in mind. So if you don't see a topic that we're listing in this poll, please feel free to type it in the question section at the end of the presentation. So this will be driving our thought leadership exercise. So I'm very grateful for your feedback and your opinions. I think we can look at the results now, Abel. Okay, so consumer trends in Latin America that could affect logistics comes in second place. First place, the biggest obstacles facing logistics, regulations, inefficiencies, infrastructure. That's probably the next article that we are going to produce. So thank you so much for your feedback. And let's move on to the next section of the presentation. Let's talk about the bad and what are the challenges, obstacles that we see in the industry. Let's move on. Okay, first one. As all of you know, ocean and air freight rates will underperform this year. And the reason for that, I will explain it in two aspects. And next slide will show you some of the reasons behind. But first thing that I want to share with you is that on the global air cargo rate changes versus 2019, we're seeing a dramatic drop versus 2019. And this chart is really, really interesting, because across all lanes, not only in Latin America, but across all lanes, we're seeing a drop in rates. And there are two reasons for that. In Latin America, first of all, in the North American lane, north-south, we're seeing air freight volumes lower in 2023 versus 2022. And it's expected to be around still 15% higher than 2019, but but comparing to 2022, it will be we will have less volumes and we will have lower rates. And there are two reasons for that. First one is we have a lot of capacity coming back online because of commercial and passenger airlines are now putting back their capacity in their bellies. And belly freight is almost back to pre-pandemic levels, and that's adding a lot of capacity into the market when there's a lot of stagnation in demand. So the law of supply and demand, we're seeing a shift in that. And in Latin America, especially, we're seeing airlines that during the pandemic, they experienced that that moving cargo was a main generator of revenue, and they expanded and improved their service offering. And now there is greater competition between commercial airlines and only freight, only cargo airlines. And that the first example that comes to my mind is how LatAm managed to survive through the pandemic because of the investments they did in improving the service experience and improving the offering to their customers. And now they have a platform in which customers can book air freight space in their platform, and it's becoming more automatized versus what we experienced before the pandemic. And that's creating a lot of competition. And now we have more capacity in the market than the market requires. And we will continue to see a drop in rates during the rest of the year. So it's not only in Latin America, but at the global level that air freight players will be crunched by the declining in rates. And when we look at the ocean freight rates, it's a similar situation. The market sentiment is bearish for the rest of 2023, considering falling demand, weak demand in the US, weak demand in Europe, weak demand in Asia as well, will generate an impact across companies servicing, for instance, the Pacific South American coast to China, or the East Coast South America to China. So even though that we're seeing opportunities in exports to Asia and to China, considering the reopening of the economy, imports in Latin America this year will grow at the slowest pace globally. And that will definitely take an impact into the operations and the flows of cargo that ocean players have today, specifically in Latin America. And weak rates experienced by carriers definitely are because of two factors: spot rates and contract rates. And during March, April, and May, in which these 3 months, during these 3 months, contract negotiations take place with the large shippers, and the short, medium, and long-term rates will be negotiated. And right now we're seeing the pendulum swinging back to shippers. And what we expect to see is contract rates being very close to spot rates in the ocean market. And basically that will have an impact in the revenues and profits that companies operating in Latin America will experience in 2023. So again, we're seeing the same situation in Latin America and at the global level, even though because companies like MSC will start receiving additional ships that they will be coming online, and we will have more capacity moving to move freight, and the demand will still be uncertain until we clear out what happens in the US economy and globally during the second half of the year. But during this first half of the year, what we're seeing is very weak demand all over the place in Latin America, very low and pessimist GDP forecast, imports and exports forecast. So that will take an impact in terms of the freight rates that logistics players will be able to charge. So the second part of the explanation is the next slide, in which we talk about global trade. And Latin America will hit the brakes as well in terms of global trade. And one of the things that becomes very worrisome for the region and for the logistics industry and for players in Latin America is the fact that the region will record the lowest export and import growth globally. So that is one of the things that will impact the most logistics operators, because as you can see in both charts, South American exports will grow at a very, very slow pace. They will grow minimally, while imports will contract this year. And when we think about imports, the factors are very simple. The contraction in imports is due to higher interest rates. Consumers are not spending as much as they used to. There's the liquidity crunch that we are seeing in the US will definitely take an impact in Latin America. And some governments, for instance, Petro last week, with all the situation that happened in the US, he demanded the private sector, the private pension sector to bring back money from the US to Latin America. And we think that is unrealistic and that won't happen. So the crunching in capital and loans will definitely impact the ability of the private and companies importing goods into the region. And the second element that we need to take into consideration in terms of imports is the fact that consumers are also impacted by the depreciation of the local currencies. So local currencies in Chile, in Colombia have been the worst performers across a global basket of currencies, and that is also impacting the disposable income and how consumers can spend in goods in the region. Because when we think about countries outside Mexico and Brazil, the rest of the countries in the region, they rely upon imports of goods and high value added goods for to meet domestic demand. And that's going to take an impact in terms of the logistics operators that service, for instance, warehousing, that offer value-added services, inventory management, trucking services as well. They will be these companies that are primarily focused on moving goods that are either exported or imported will have a very, very difficult 2023. And when we think about exports definitely will be impacted because US consumers, European consumers will be suffering the impacts of slower economic growth and will be starting to experience the impacts of the interest rate hikes that the Fed has been putting on the table since the last year. So typically, the effects of interest rates, they start to make a dent in the economy 12 months after those decisions were taken. So actually, right now is when we will see the impacts of higher interest rates, the slower economic growth, and companies that have been growing based on issuing debt, they will have a very challenging time. So if your company has been growing the business based on debt, servicing that debt is definitely becoming more expensive by the day. So that is something that needs to be taken into consideration, how the global picture is impacting Latin America as a region, and specific markets like Colombia, Chile, Peru will definitely feel the greatest pain in 2023. So let's move on to the last trend of the bad that we have to show you today. And this is worrisome because from our point of view, investments in logistics technologies are drying up since 2022, and they will continue to dry up in 2023. And that's very related to one of the issues that it will definitely take an impact in the startup scene in Latin America is the collapse of the Silicon Valley Bank. And that's because that bank was probably the main avenue for startups to get US dollar accounts in the United States. And over the next 3 months, we will probably see logistics companies, startups that do not have money and they don't have the funding to pay for payroll or to continue operating in the region because they cannot have they don't have access to banks accounts in the US. There's a lot of red tape, and the situation is becoming very problematic for the startups because as interest rates went up, the funding that they were able to generate became more expensive, and investors focus their attention in profitable companies, profitable startups instead of startups that were focused primarily on growing but without providing any profit. So when we think about how the situation has changed in Latin America, this is very worrisome because startups have they have provided innovation, they have provided new disruptive models, they have provided they have forced logistics legacy players to improve technology, to improve customer service, to improve technology used. But now we may face a return to old practices because legacy players may not be faced with the challenge of improving their services or improving the way that they use technology. So just comparing 2022 with 2021, there was a drop in 60% of total aggregate value in venture capital, and that's a dramatic drop. But when you look at February 2023 versus 2022, the drop is actually higher. It's 83% in terms of aggregate value, and that is concerning because when we think about companies developing new technologies, new processes, typically you need to create a service that is 10 times better in order for the market to adopt it. And basically, if we don't have logistic startups, we may see a slowdown in the innovation in the region. So opportunities, basically, we see two. Startups focus on automation, specifically supply chain transactions, will definitely have an edge. And also startups focusing on reducing the number of people needed for routine tasks. Those two types of startups will have demand for their services. And a third opportunity that we see is as startups start to leave the region because there's a lot of consolidation or because they cannot find funding to continue their operations. I think legacy logistics players will find a great opportunity to start acquiring assets, knowledge, and systems at a very cheap price over the next 6 months. So that it's a great opportunity for companies looking into the region because you will find cheap assets and cheap companies. They have really great models, but they may not have funding. So this is a great opportunity if you are a legacy logistics player with a lot of capital, and if you're bold to expand your operations in the region. So that is the wrap up of the bad section, and I'd like to move on to the last section of the presentation, the ugly. I think this picture is the best image. So I think my message in this section of the presentation is these might be the worst case scenarios. These might be potential black swans, but at the end of the day, they represent also opportunities if we look at the half full glass instead of looking at the half empty glass. So let's move on to the next slide. First, a steeper recession in the US and Europe could probably drag economies in Latin America into a deeper recession. So the outlook for the global economy looks very bleak. And in some countries, you will find very challenging economic environment. And again, if we go back to the analysis of contract negotiations for your services taking place right now or in the next month, what we recommend is basically try to find avenues to delay those negotiations until at least second half of this year. Try to find ways in which you can find leverage, because right now shippers have the pendulum in their favor, and they will start to push you for lower rates. And considering the economic environment in which we see countries like Brazil, Colombia, Ecuador, Peru. Recently, this chart that you see in front of your screens from the Latin American Economic Survey that was conducted between January and February, you're seeing the majority of countries are expected to perform worst versus what we expected at the end of last quarter in 2022. So companies are right now in a very negative mood, and especially because of what's happening in the US, in Europe. So these last couple of weeks have been very, very concerning. So delaying those negotiations and delaying those contracts, it's a good strategy because things might evolve in a positive way as we start to turn into the second half of the year. So definitely the region is highly exposed to the slowdown in the US. And what we see is outside cross-border freight, outside the warehousing, cold storage industry, very limited opportunities in Mexico, for instance, to serve the domestic market. The great opportunities will be serving cross-border nearshoring operations. Now, when we look at the tightening financial conditions, that is something also worrisome, especially for companies, again, that need to find funding, or they have been growing based on issuing debt. So taking into consideration the opportunities we see, for instance, in Paraguay, in even in Mexico, cross-border again, there are some opportunities in the domestic economy in Costa Rica as well. In Guatemala, there are opportunities to export perishables, to export textiles. Those are opportunities that we see, even though that the economy is definitely gonna take an impact this year, and we do not expect these changes to improve, but actually get worse by the next quarter. So take that into consideration. And moving on to the next slide, what we have seen during the first 2 months of the year is the widespread layoffs and exit of global startups. Examples from Uber Eats, Joker, Beat, downsizing their operations in Latin America, or even leaving the region, because in the case of Rappi, it became the dominant player in the industry in Colombia and in other markets in Latin America. That is definitely creating an impact in terms, again, of innovation and how the industry, the e-commerce industry, is perceived. Because as you can see in the chart, the e-commerce industry, specifically e-commerce retail, is expected to slow down in 2023 and 2024. So moving from a 64% growth in 2020 and 2021 to 17% growth in Chile, it's definitely a dramatic drop. And what we have seen is companies that have invested in facilities, in warehouses, in providing added value services to e-commerce companies, they are not getting the return of investment that they were expecting, because everyone was picturing the e-commerce industry as the best place to be in the region. But actually, as consumers return to the stores, return to their works, they return to the old ways of purchasing, and facilities are experiencing the lack of customers and products that everyone was forecasting. Also, it is very important to consider the fact that at the global level, companies like DSV, companies like FedEx, companies like that CH Robinson, for instance, that they have implemented higher freezes at the global level, and their expansion plans in Latin America are probably put to hold this year. Outside of what we have seen in Mexico or in Brazil, those companies are retreating and they are actually laying off people. And that will impact the region in Latin America in terms of the service offering provided to large shippers will be affected, but also, again, will generate opportunities for local players that see how those global dominant players retreat, and they have the opportunity to steal market share and expand their operations and their investments. So it depends on how you see, again, the industry, but e-commerce will definitely slow down, and the specific segments that will drive growth and the specific customers that you need to pay closer attention, I think that's the best strategy to focus on 2023. How I can adjust my service offering, how can I adjust my operations to serve customers that are needing my services, and how can I beat my competition, and how can I get market share from those retreating players. Definitely that's something to pay close attention. So I like to move on to the last slide in my presentation, which includes other recent logistics reports that we have published. These are published reports that are for free, that you can look at and gain a lot of insights in Latin America. Definitely the LatAm logistics market data portrait is a combination of different sources of information that we compile in a single report that will drive you and will give you a lot of information in terms of how different countries will perform with the specific numbers, with a specific forecast. And we recognize that it's really hard to find information across different places. So we did this exercise to compile and collect this information in one place. Looking also at the Latin American logistics leading buyers profiles and database, that is an exercise that we also created between last quarter of 2022 and 2023. Basically, we have a list of 250 logistics buyers in Latin America with their profile, how much they're spending in transportation, how much they're spending in warehousing, in other value-added services, who is the decision maker, how much they're spending between international and domestic transport services. So that's a very detailed profile that we created among top companies in Mexico, in Brazil, in Chile, in Colombia. Very valuable information for logistics service providers. But also we have over 400 plus contacts in the database, in which we have name, email, telephone. That's a traditional list of potential buyers of your services. So that is something available to you as well if you're looking to generate new leads, new customers. And I invite you to look at those reports, because I definitely believe, and I'm sure that you will find insights to develop your strategy in 2023. So I like to stop here and give time to the audience to ask questions or make comments, so we can have the last section of this conversation very interactive.
All right, Diego, I'd like to come back on and give you some of the questions that we've gotten in the interim during the presentation. So one of them is, how are retail and e-commerce players adjusting their logistics operations during the economic slowdown that's being experienced now in Latin America?
Thank you, Abel. What we have seen, and I talk about this during the presentation, is the best example that comes to my mind is Mercado Libre. Mercado Libre is planning to invest in Brazil and in Mexico almost double what they invested last year. And that is very important to understand as an example, because the company is looking into improve its network, reduce cost, gain market share by offering a better service to its customers. And the investments required in their logistics operations are going to be focused on distribution centers, fulfillment centers to reduce delivery times. They will be investing also in fleets, electric fleets as well, doing the transition to electric vehicles. Greening their operations is also very important. So that's one of the positive effects that e-commerce players are considering for the next 12 months in Latin America. And the best example is Mercado Libre again, but we're seeing it across other companies like Falabella, Walmart. And this is an exercise that they're doing in terms of becoming more efficient, improving the bottom line of the business, and creating the infrastructure required to integrate their service under one roof. So probably that's one of the trends that we might see evolving out of this challenging year, and how companies can integrate vertically and offer not only logistics, merchandise, payments, and other services within one roof.
Okay, so I have a couple of questions here that are related to Mexico. So one is talking about how AMLO's administration has introduced policies that can make doing business in Mexico a bit more difficult. So does he have any policies in place that could affect the benefits of nearshoring to Mexico right now that could impede that growth?
That's a great question. Based upon the research that we have done, I think one of the greatest challenges is the lack of incentives in the industrial sector to attract companies into Mexico for the nearshoring. In terms of the negative policies, definitely there are plenty of them. One of the key challenges that we're seeing is access to electricity, and how his policies in the energy sector have impacted the generation and the investments in green energy and new power alternatives in Mexico. And right now that is impacting the availability of electricity among industrial players at industrial parks. So what we have seen is that actually some companies are taking the matter into their hands, and they're investing into captive power plants because there is no availability of electricity in some parts of the northern Mexico. So that is one of the examples in terms of how his policies are negatively impacting the industry. The lack of incentives again. And finally, third point is in the security issues that may impact some of the locations that can be attractive for this type of nearshoring operations is also one of the negative sides of the AMLO administration. And it's the fact that security issues in places like Guanajuato or Jalisco, also in Chihuahua, for instance, there is not a clear policy in terms of how to address those issues, and that is spooking investors, and that definitely spooks companies looking into the country to expand their operations or to build new facilities to produce and serve the US market. So those are examples in which we see how the government is impacting the flow of business. But at the end of the day, the movement of companies into Mexico is driven primarily for, again, two reasons: cheaper labor and less uncertainty in the supply chains, and faster. It's not just-in-time production, but it's creating an interconnection in the supply chains in North America. That's probably what's going to drive the growth of the nearshoring in the next 2 years.
All right. Seems like you answered two questions in one, because one of the other ones that we had was actually talking about how Mexico suffers, from a severe high level of truck hijackings, and so how that would impact the whole security issue. But you kind of already addressed that. So another question that we have here is about the tech thing that you had mentioned about logistic operations, and it says if investors put more money into tech that can automate or streamline logistics operations, does this help only legacy players, or do smaller companies also benefit from this?
No, all companies across the table benefit from it. And actually, that's one of the challenges that we might see in 2023 in Latin America, and is the limited impact, or is the high impact that we will find in terms of the liquidity crunch, and how investors are very concerned about the banking situation in the US, and the availability of startups finding funding in the US and finding access to US dollar accounts. So when we see how logistics legacy players and startups have developed the industry, is not because the demand from shippers, but actually it's because they had access to investment, and they had access to venture capital, and they had access to cheap money. But the scenario has changed dramatically in the last 12 months. And innovation will definitely take a dramatic shift in Latin America, because companies that probably will run out of cash, they will go out of business, and competition in the industry will be crushed by companies with capital and with the money to buy assets. So the way that we have seen the logistics industry evolving so rapidly in the past 4 or 5 years, we might see a stagnation in that process, and we might find that innovative ideas will start coming out from elsewhere, from other regions, rather than from Latin America.
All righty. So we have another question here that goes in a different direction, and it's asking, would drones be an opportunity for the logistics industry in Latin America?
I think we're still far away from that. Drones are actually piloted in the US across different states, different industries. But in Latin America, I don't see it impacting the industry in the next 5 years. And the reason for that is because, first, security concerns. Drones are an expensive machine, especially if you take into consideration how advanced they need to be to carry parcels. Those drones are expensive. And we know that in Latin America, we have a lot of insecurity issues. Also, there is opportunity for very specific industries, perhaps pharmaceuticals, hospitals, but to generate a massive adoption of drones in Latin America for e-commerce, it is still far from reality. And I don't expect that. And I haven't seen in leading companies like Mercado Libre or Falabella looking into that strategy to reduce their logistics cost and also to reduce their carbon footprint. I haven't seen that yet, and I don't expect it to happen in the next 5 years.
Okay, we have a question here that's a bit more related to sort of high-level politics. I'm going to read it to you. Let me know whether you think this is within your purview. It's not the usual thing that we take on, but I think it's worth considering. So this particular question says, what do you think will happen in Xi's meetings with Vladimir Putin and defend the position of Latin America, specifically Mexico as the main exporter, and the U.S. sanctions for those who do business directly or indirectly with Russia? I see what I mean. Yeah, that one's a
no, yeah, tough question. Let me take a look into that. So first situation that I see is that Xi Jinping is definitely poking the US in terms of just arranging this meeting with Putin. In terms of leverage, I see Xi Jinping having leverage over Russia, definitely over Vladimir Putin in terms of the demands that he can get out of the negotiations that he is having, because at the end of the day, China became the lifeline for Russia, specifically for imports, for exports as well. So China has a lot of leverage. And when we think about Mexico and the role that Mexico has in this whole scheme, I've seen what I see is Mexico benefiting tremendously from the situation, because Mexico is positioning itself as a top of mind location for multiple industries. So multiple industries that range from automotive, high-tech, semiconductors, electric vehicles, fertilizers as well. So the way that the situation has evolved and the war between Russia and Ukraine during the last 12 months, I think is actually becoming one more reason for companies to get closer to the US, to their risk, their supply chains, and to invest in the country. So when we think about political terms, how AMLO may impact those decisions, at the end of the day, it is very minimal, because what companies are looking into right now is the big scheme of things and how they can avoid impacts from the supply chain issues that they see in Asia and in Europe. And what's the best way to de-risk your supply chain? Being closer to your customer in the specific areas where you find interconnection between your suppliers, between producers, between your consumers. So at the end of the day, I think that this will have a much more positive impact to Mexico rather than a negative.
All righty. So I'd have another one here that's asking about last mile LatAm countries. So it's basically saying, can you share some information about last mile LatAm countries? And I'm not sure exactly what the questioner meant by that, but maybe you understand it better than I do and can offer some info.
No, maybe I can talk about opportunities in last mile, but let me think about top opportunities that I see. First one, definitely finding companies. If you're a legacy logistics player, if you're a big global company, definitely look into what companies might run into cash issues, into funding issues, because there are a lot of startups in the last mile that have really good technology, that have grown very rapidly, but they don't have cash, or they don't have yet find profitability in their business. So that's one opportunity in the logistics. When I think about specific countries, so specific countries that come to mind: Mexico, Brazil, and Colombia. Even on top of Colombia, I would say Chile. Those three markets, Mexico, Brazil, and Chile, represent great opportunities for last mile. And in what sense? Basically, in those markets, customers are becoming more specialized, and they're demanding faster delivery times, and they're becoming more specialized in terms of what they demand from their shipping providers and from the sellers of the goods. So the way that companies can develop last mile is by looking into alternative service offerings, looking into dark warehouses or spoke and hub models, how they can leverage smaller locations closer to customers that can lower cost in your last mile. And there are definitely a lot of companies looking into this model, how they can reduce their carbon footprint and how they can cut cost by providing smaller warehouses closer to customers that have a limited number of SKUs and with reduced inventories, but can serve much faster customers. And that's probably one of the services that is becoming more relevant for customers when they're looking into fast moving consumer goods and those high rotation goods. So how those specific sectors evolve and how last mile delivery adjusts and improves the way it operates to serve better those customers, it's something that is becoming an opportunity, and definitely companies are specifically looking into adjusting their models to improve their service offering, cut cost, and cut rates to merchants, and at the end of the day, improve the service experience to buyers.
All right. Well, thanks so much, Diego. We've exhausted our questions and we've run over time, so I think we're kind of wrapped up for the moment. So I don't know if you have any closing remarks for us to finish up with, but I think we can do those and say good afternoon to everyone.
Awesome. Yeah, I just want to thank everyone for attending the webinar, for your interest in getting to know what we can offer in the logistics industry. I'm really excited to see your comments, feedback. Please send me emails or send us your comments about topics, about what we should write about the industry, because that definitely will drive our thought leadership in the next couple of months. But thanks.